Good evening, everybody. Thank you so much for joining us today for the Mere Asset Small Cap Fund Anniversary webinar. As you know, we launched our Small Cap Fund on 31st of January 2025. Happy to share that we have completed first year. And despite a very, very difficult market situation, happy to share that the fund has done quite well. On a one-year basis, I know the fund has delivered a return of around 11%, 11% positive return as compared to around negative 0.6% return in the benchmark, thereby delivering outperformance around 11.6%. Also happy to share that on a one-year basis, Mere Asset Small Cap Fund ranks 1 out of 30 small cap funds. This is the performance that I'm sharing as of 5th of February. We just completed a little more than a year. And if you look at even on the 6-month basis, the fund has outperformed the benchmark by more than 6%. So we have had a very, very promising start. Of course, 6 months and 1 year is very, very short time period in the history or the life of a small cap fund. We hope that this fund can become a good wealth creation tool for all our investors, and many more investors hopefully would join us in this journey. But as I said, it has been a promising start. We have laid a good foundation for the portfolio, and hopefully we can build upon this going forward. So we are going to talk a little bit about what the portfolio construction has been like. But before we do all that, I would like to start off by what has happened in the markets in the last 1 year, and how do we see the outlook for the market in the year ahead. So as you know, last year was very, very eventful in terms of several measures undertaken by the central government, by the RBI, to kickstart the economy. As you know, 2024, calendar year 2024 was the year where we started seeing some kind of cool off in the economy. If you remember correctly, September quarter of 2024 was the quarter where the GDP growth actually bottomed out at around 5.5%. And at that point of time, interest rates were going up, economy was slowing down. And then what we saw was a complete transformation in the subsequent year, which is calendar year 25, in which several steps were undertaken by the central government. The first of them, of course, was in the union budget of last year. We saw a big income tax relief coming in, almost $15 billion or 0.3% of GDP. In rupee terms, around 1 lakh crores of benefit was given by the finance minister to the salaried class. In terms of, and of course to general public, in terms of significant expansion in the income tax limits, and because of which almost 1 lakh crores of benefit was given to the public at large. And then of course you saw various state governments giving cash transfers mostly to the weaker sections of the society, especially to the women heads of household. As we speak today, several state governments are transferring almost 1.8 lakh crores, or you can say 0.5% of GDP, which is a big income support for a very large section of the population, and it's quite big in quantum terms. And of course, the biggest reform last year was the GST 2.0, in which we saw the Prime Minister announcing significant realignment of the GST rates during his Independence Day speech at the Red Fort. And thereafter, I know the GST Council carried out significant changes, and we saw significant relief being given to the middle class in terms of consumption. Almost 2 lakh crores of benefit is something that we believe will accrue to the people in terms of lower cost of various items. The biggest beneficiary, of course, were automobiles, two-wheelers, four-wheelers, tractors. We also saw big benefits for consumer durables and white goods like air conditioners. And we believe that this will be the categories which will be the biggest beneficiary of this GST cut. And we believe that the revenue buoyancy, because of more rapid adaptation of GST and more formalization of the economy, the actual impact on the government finances will be much lesser than this amount. Along with, of course, what the central government has been doing, RBI has been carrying out significant easing in monetary policy. As you know, in little more than a year, RBI has cut rates by 125 basis points. I know the repo rate has been cut, although the policy today did not see any cut in interest rates, but we saw significant easing of monetary policy done by RBI in the last 1 year or so. As the repo rate has been brought down, various loans have become much cheaper. As you know, if you look at the mortgage rates today, if you were to buy a house and take a home loan, we have seen a significant cool off. Last year, while mortgage rates were close to 8.5%, I know this year we are seeing various banks giving mortgage rates for as low as 7.2, 7.3%. Similarly, auto loans, personal loans have all become cheaper. We believe this will go a long way in reviving consumption. At the same time, we believe even the corporate capex can benefit because of the significant easing in monetary policy. And then of course there is one big reform which is expected to which is actually due from 1st January 2026. While the pay commission is being set up, it will come up with its own measures in terms of what is the final award will be, but the implementation date or the date from which it is applicable is 1st January 2026. Our sense is by the first quarter of 2027 we will have clarity, but broadly our view is it should be somewhere between 1 to 1.2% of GDP. Around $45 billion to 55-60 billion will be a very very big amount, and that arrears which are due from 1st January 2026 will be paid out. So as you can see from this chart, there's significant measures which are being taken by the government, both the central government and the RBI, to kickstart the economy, and the benefit of that will be visible in the market from a revivals in the earnings story. If you see, the markets peaked out in September of 2024. That's when Nifty 50 touched 26,000 for the first time, and as you know, the market is still below that level. It's almost been 15-16 months. The big reason, of course, the correction was the slowdown in economy, and of course we saw earnings growth of corporate India come down very very meaningfully, and we will see in the next slide through the numbers at how meaningfully the numbers have changed. So if you look at Nifty 50 in this chart, you saw that between 2021 and 2024 we saw earnings CAGR of almost 26%, EPS CAGR, as you can see in this slide, of almost 26% for Nifty 50 companies. Mid cap 50 companies, 150 companies delivered even higher, and the small cap delivered almost a 33% earnings CAGR, which was a very very strong earnings compounding. We saw markets also compounding very fast between 21 and 24. Unfortunately, like all good things, that phase also came to an end, but only temporarily. Because of the slowdown in economy, we saw a slowdown in earnings growth. So for fiscal year 25, we saw earnings growth of Nifty 50 companies come down to 3%. But the bigger problem was in the small cap companies. We saw earnings actually decline by 5%. And this is a big reason why, if you see in the last 15-16 months, Nifty 50 has actually not gone anywhere. It is plus minus 5% of where it was in September 24. But the small cap space is something which has seen a meaningful correction. It has corrected almost 25% from the peak that we saw in 2024. I think because of the various measures that I spoke about, we are about to see a turnaround in the earnings. As you can see in these numbers, for Nifty, for small cap 250 index, we will see 2026 is the year when the earnings will start seeing a turnaround from negative to positive. So for this year, we expect, let's say almost 8-9% kind of earnings growth. And after 5 quarters of negative growth, I think this quarter should be the first quarter of the earnings in small cap space shifting from negative to positive. And for the year as a whole, we expect 8-9% growth. And the next year should be the year of much larger earnings growth. Fiscal year 27 should be the year where we see a much larger earnings turnaround. And that is what we believe should drive good performance from the small cap space. As you can see from this chart, while Nifty 50 is expected to deliver around 10-11% kind of earnings growth between 25 and 27, we expect Nifty small cap 250 should deliver almost a 17% earnings growth rate. If you look at the background, right? So this is of course what has happened in the last 5-6 years. This chart gives you a summary of what has happened in the last 5-6 years. But if you go back in time, if you look at the history of Nifty small cap 250, this is the benchmark, whose inception date is in 2004. So it's almost 21-22 years since the time this benchmark is in existence. The IRR return of the benchmark is somewhere around 16%. And we have seen small caps deliver significant value to the investors over the last 20 years, and we believe the next 10 years, from a earnings growth acceleration point of view, from a capital formation point of view, should be also be very, very exciting for Indian small cap space. And therefore we believe that for all investors, small cap, all investors who are looking at long-term wealth creation should have some allocation to small cap. How much, of course, is a function of their individual risk return appetite, their ability to see drawdowns. This is my 20th year in the markets, and in my career I've seen at least six, in last 20 years, almost six corrections in small cap space of more than 30%. As I said, even from the peak of September 24, we have already seen small cap index correcting almost 25%, and individually stocks have corrected 25, 30, 40, 50, 60, 70%, in some cases even more. So corrections are par for the course. Every time there is a slowdown in earnings, either because of some domestic economic slowdown or because of large global events, we see a slowdown. We believe these slowdowns are good opportunities to build a good small cap equity portfolio, and that is precisely we have been trying to do in Mirae Asset Small Cap Fund. And I think despite a very, very challenging time, we have been able to have a very good start in the first year of the fund. Now, I also wanted to share some thoughts upon how the regime, or how the landscape for the small cap space is changing in a very, very meaningful manner in the last few years. So let me present a very, very important slide. As you can see in this chart, between June 2020 and June 25, there is a very big change in definition of how the AMFI classifies large, mid, and small. As we all know, large cap space is officially, first 100 stocks. This 101st to 250th stock by market cap is the mid cap space, and 251 and below is what is called the small cap space. Now, if you look at in this chart, in 2020, June 2020, the smallest large cap was around 27,000 crores. If we speak in June 2025, in 5 years' time, this definition changed to almost 91,000 crores. In fact, as per the latest data, which is at the latest AMFI classification as of January 2026, this number has moved further to 110,000 crores. All right, so you can see almost 4 times change in market cap for the 100th company between 2020 and 2025. Similarly, if you look at the mid cap space, the definition used to be 7,000 crores to 27,000 crores broadly. This was the market cap range for mid cap companies in June 2020. As we speak today, again, this range has become almost 4 times. So the smallest mid cap company around 31,000 crores, and the largest mid cap company at around 91,000 crores. And similarly, if you see the small cap, that is where the biggest change has happened. If you look at the overall market cap of small cap space, used to be 9 lakh crores in 2020, and now it's almost 5 times, and 44 lakh crores. And if you see the definition, the small cap used to be, let's say 7,000 crores and below, and today that number is around 31,000 crores. So there's been a very, very meaningful change, almost 4.5 to 5x change in definition, and therefore how we look at small cap also needs to change and also needs to evolve. So small caps of today are no longer, fragile, very volatile, weak corporate governance, weak balance sheet qualities. A lot of these companies are fairly large companies, 20,000, 30,000 crores in market cap, 500 crores, 1,000 crores in profits. A lot of them are leaders in their own respective categories, right? So they could be small cap by definition, but they have market cap in billions of dollars. They have been around for 50 years, some cases 100 years, and they are leaders in their own specific niche. It's just that the niche that they're present in is fairly small. And therefore, we believe that we have to look at small cap companies with renewed respect. They are much more stable. They are much more competitive. They have fine-tuned their business models. It's a fiercely competitive market across various sectors. And these companies, most of them are leaders in their own rights. And therefore, the stability of the small cap space, the growth prospects of the small cap space, it's looking much more promising as what it used to look, let's say, 5, 10, 15 years back. Also a very very meaningful change is this, that there are a lot of new ideation which keeps happening in the small cap space, right? So as you know, in the last 5 years, while large cap IPOs have been only 9, and mid cap IPOs have been around 20, but small cap IPOs have been almost 70. And I think this year itself we should see several new small cap IPOs. So what is happening is that for a discerning investor, for an investor who's able to do the hard work, uh, pick and choose the right names in the small cap space, there is a lot of opportunity to pick and invest in the right idea. As the Indian economy is dynamically evolving, as new sectors are getting added, we are seeing a lot of new ideation. So for instance, if I were to just recount some of these changes, in 5 years we have seen a big change in India's economy, in the sense that the digital economy has come up. Now you see various e-commerce companies, internet companies, which did not exist 5-10 years back. Similarly, we have seen new sectors getting added to the economy. So today you have the whole energy change. As far as the automobile sector is concerned, from internal combustion engines, we are moving to electric vehicles, and there is a whole ancillary change which is happening along with it. Similarly, we are seeing from coal power, we are moving to uh, we are moving to from coal power, we are moving to uh, what you call solar and wind. And there is, of course, not just the utility companies, not just solar module and cell manufacturers. We are also seeing a lot of what you call you know component ecosystem also growing around that. Similarly, if you see, manufacturing in India in the last 5-6 years has received a big boost. We have seen EMS companies, we have seen defense companies come up, the sectors which were very small or did not exist. And we believe that the whole semiconductor ecosystem, the whole mobile phone manufacturing, laptop manufacturing ecosystem that is being built up will create its own set of winners in the next 5, 10, 15 years. And therefore, today, when you construct a small cap portfolio, it has to look very different than what it used to look like 5, 10 years back, because Indian economy is now much more broad based. It has become, of course, a lot larger. We are today a $4.5 trillion economy. Hopefully, we will become the world's third largest economy in the next 2 years, and we will see a burst of entrepreneurial energy as new and new business models, new ecosystems, new technologies, make their presence felt. And the first change which comes in the small cap space. So let me also share something very interesting. In the last 5 years, as you all know, we have seen some of the sectors which were missing in action for almost 10 years, from 2010 to 2020. As you know, there was a very little capex cycle, but in the last 5 years, this sector, the capital goods engineering sector, has done very well. So if you see the difference, why have small and mid caps done so well in the last 5 years compared to the large cap, is that the benchmark, the large cap index has 5-6% weight in benchmark from capital good companies, but it is around 10% in the mid and the small cap space. Similarly, sunrise sectors, let's say like hospitals, it has 0.7% weight in the large cap universe. It has almost 3.5% weight in small cap index. Similarly, auto ancillaries, that is where a lot of things are happening, especially with the advent of EV ecosystem. We are seeing it is less than 1% weight in the large cap benchmark. It has almost 5.5% weight in the small cap index. Similarly, if you see pharma has 3.5%, 3.7% to be precise weight. And you see in the whole CDMO opportunity come in, the contract research and manufacturing opportunity, which largely sits in the small and the mid cap space, having almost 8.5% weight in the small cap compared to 3.7%. Similarly, real estate has 1% weight in large cap. It is 2.1%. And there are, of course, a lot of categories. So, for instance, capital market, companies which are asset management, insurance, depositories, exchanges. There's a completely new sector. There's very very little weight in the large cap, but it has almost 5% weight in the small cap. Chemicals, almost negligible weight in the top 100 companies, almost 4.5% weight. Similarly, textiles, sugar, some of the other hotels, hotel, travel, tourism, hospitality, internet, these are all new spaces, new sectors which have come up, and because they are new, they happen to start their life as a small cap company, and gradually in their journey they become larger in size, and we see them first coming into the small cap index, and that is where a lot more growth happens. So what we are saying is that, while we remain optimistic, and we believe large caps should be a large part of investors' portfolio. In fact, I manage a flexi cap fund also, and we believe that it's a core portfolio position. And somebody who wants just one fund, flexi cap category works quite well. But for those investors who want to participate in the fast growing part of the Indian economy, should definitely look at small cap as a very, very large opportunity. So this is, I think, very, very important for us to appreciate and look at. And we believe, therefore, the small cap story is much more compelling for all investors to look at in India. Now, coming back to our fund, which is the small cap, Mary Asset Small Cap Fund, I think I like to share a few insights into how we are looking at it, how we position the portfolio. So, as you know, the small cap space has been undergoing a lot of volatility, and we have tried to make sure that the portfolio stays balanced without too much volatility, at the same time grows. And therefore, we invested in companies which have shown good earnings growth in a very, very tough year. So the portfolio is currently overweight on domestic sectors, domestic cyclical stories. So the biggest sector, of course, for the portfolio is banking and financial services. We own several small banks, small NBFCs, housing finance companies. Then we're also very optimistic, as I said, on capital market companies, be it asset management companies, be it depositories, be it other people in the capital market ecosystem. This is a space which continues to do well. I think as far as the banking and the NBFC space is concerned, we are seeing interest rates coming down. We are seeing credit growth is picking up from 10% to 12% for system as a whole. And we are seeing asset quality remaining at very pristine levels, and therefore we remain quite optimistic for the banking and the financial services space. Also, we believe auto sector is a big beneficiary of not just the rate cuts, but also a very, very significant GST cut that we have seen. The prices of various two-wheelers, four-wheelers, entry-level cars have come down to as much as 20%, and some of the larger cars have seen pricing come down by 10 to 15%, and that is leading to a big bump up in demand. And we believe not just auto OEMs, but auto ancillaries should continue to do well. Similarly, white good companies, air conditioners, washing machines, refrigerators, this is a space which we believe should do well. Discretionary consumption companies, be it travel, tourism, hospitality, that is also a beneficiary of larger incomes, more disposable incomes in the hands of the consumers. We remain quite optimistic on the capital formation activity in the country, and therefore capex, engineering, defense, these are sectors which remain a large part of the portfolio. And as we saw in this year's budget also, the government continues to emphasize on capital formation. The central government capex is expected to go up by 11 to 12% for this year, almost 12 lakh crores, the very, very large amount. Government spends on infrastructure has moved from around 1.6% 5 years back to almost 3%, 3.1, 3.2% of GDP in this year's budget. And I think this is a very, very welcome move, which means that companies which are involved in road construction, railway wagons, railway engineering, companies which are engaged in ports, in airports, and all activities related to construction of metros will definitely continue to benefit from increased government spends. What we are a little cautious on is, of course, as we know, there is a lot of headwinds about export sectors. Thankfully, the US India tariff deal or trade deal is expect has been preliminary announcement has come. We believe the fine print will come out by March, as the commerce minister announced, and therefore a big concern which was there for the Indian equity markets and the Indian economy, which was the delay in finalization of the deal, has also been taken away, and therefore we believe while India's exports will become much more competitive, little worried about the prospects of growth in the western part of the world, and therefore remain cautious about IT as a space. We remain cautious about chemicals, while the sector has been languishing for 3 to 4 years and the valuations become very attractive. We continue to wait out for growth revival in that space. On pharma and healthcare, we remain more optimistic on CDMO, which we believe is a sunrise opportunity, on domestic formulation space, hospitals, diagnostics labs, rather than the export-oriented generics opportunity. So I think broadly this is what how we would look at it. Our sense is, like I said, for FY27, Nifty Small Cap 250 as an index should deliver around 17% earnings growth, and that should really is something which we would like to watch out for. And hopefully we should see, as the earnings come back, the investor interest in the small cap space should also come back. In our view, small cap remains one of the best ways to create wealth for long term investors, for those investors who are having a 5 year plus horizon on Indian equities. Small cap space remains a very attractive space. If you're saving for your retirement, if you're saving for your children's education, if you're saving for your children's marriage, willing to upgrade your house, or you are okay with a 50%, with the 5 year investment view, and your ability to see drawdowns in the short to medium term, we believe small cap space makes a lot of sense. Also, what is the recommended allocation? We believe that if you're looking to invest 100 rupees in the small cap space this year, I think 50 rupees can be invested right away, and the remaining 50 can be spread out over the next 6-9 months in a monthly kind of a manner. So I think with this, I will end my presentation. Happy to take questions from all of you about the fund or about the markets in general, and would request we can open the floor for Q&A.
Thank you so much, Varun, for that wonderful update on the small cap fund. We have a few questions that have come from our viewers. I'll take those questions and I'll be happy if you could answer them for us. So, the first question that we've got from Parvati is what is your view on sectors and the current slowdown? And is it a good time to invest into small caps at
I think, Ursula, you have to unmute yourself.
Sorry, sir. Uh, Sir, our first question is from Parvati, and her question is what is your view on sectors and the current slowdown? And is it a good opportunity to invest during this time?
I think we'll be happy to take questions from all of you. I think there are some questions in the chat board. Maybe, or maybe we can. Okay. Okay, you can hear Ursula. Great. Okay, maybe then there is some problem on my end. Great. So we can start taking the questions one by one. I think one question I can read is, if I have a horizon of 10 years, may I invest 100% in small caps? So I said, of course, for the 5, 10, 15-year perspective, small caps make a lot of sense. But, as I said, our recommended allocation is 50% right now, and 50% you can spread over the next, 6-9 months. Yeah. Okay. Okay, let me take the next question. You're talking passive small cap or active small cap fund? Of course, I'm talking about the active Mere Asset small cap fund, which I manage. Uh, Okay, putting 50% in small cap for next year, is it not risky? So I'm talking about your allocation to small cap fund. So first of all, let us start with asset allocation. Okay, let me make myself clear. What I am saying is, first of all, every investor needs to decide, how much you want to put in equity, how much you want to put in debt, how much want to put in precious metals, real estate, and other asset class. So now within your equity allocation, you need to figure out what percentage you want to be in large cap, mid cap, small cap. Typically, we believe that, let's say 50-60% you can be in large cap, the remaining 30-40% you could be in mid and small. And so what I'm saying is, if you want to put 100 rupees in small cap this year, you can put 50 rupees right away, and the remaining 50 you can spread out over the period of next 6, 9, 12 months. Yes. Okay. In which sector we look for great opportunity for small caps? I just spoke about domestic cyclicals is something that we are very positive on. We believe the cyclical recovery in India will further strengthen, and therefore, whether it's banks, NBFCs, capital market, infrastructure, engineering, defense companies, auto, which is we expecting a revival in discretionary consumption. Remember, we also have the 8th pay commission award coming in next year that should further boost discretionary consumption, and therefore we are positive on inward looking sectors or domestic cyclicals as compared to the export sectors. That same is true for both large caps and mid caps. So how frequently do you review the constituents under this fund? Of course, we continue to manage the fund on a daily basis. It's an actively managed fund. Any outlook on the Indian IT sector from a 5-year perspective? I think very interesting question. A lot of negative news in the media because of AI. Of course, so let's understand two things. AI is going to be around. It's going to have a profound impact on all of our lives in the foreseeable future. So let me just take you back 20 years or 25 years. So as you know, there was a big dot-com boom in 1919, 2000. That time also, a lot of companies came, and they're supposed to change the word in a very meaningful manner. So what we had is what they call the IT bubble, and which burst in 2001. So did internet go away from our lives? The answer is no. The 99 2000 bubble was about the IT sector, internet coming in and becoming a very important part of life. So what has happened, is internet a very important part of life? Absolutely yes. So the technology is there. It has changed our life in ways we couldn't even imagine that time. But do some of those companies, especially at the valuations at which they were trading, are they still around? The answer is a lot of them are not. And therefore, we have to differentiate between the technology and its own sustainability, and the prices and the valuation of some of those companies, and the, I know you can say, extreme excitement about some of those. So I think every 10, 20, 30 years we see a big technology change which is coming in. Not to say that AI will not be a very big change. It will be 100%. Business models will need to be reinvented. I think Indian IT companies, especially the large cap companies, are already doing that. We should not assume that they are just sitting there and not knowing what to do. A lot of them have already started working on this transformation. Will it mean some disruption in the short term? Potentially, it could be. But we believe over a period of time, Indian IT companies will reinvent and survive, and not just survive, but also thrive. And if we look at the valuation of the Indian IT space, I think large cap Indian IT has already become fairly attractive from a valuation point of view. I think that the growth is also getting better. If you look at this quarter's earnings, the outlook is slightly better than last year, and we believe that during the course of this year, as we get more clarity on Western demand, things will get better. On the small and the mid cap IT space, yes, there are some concerns, and therefore we maintain our underweight stance on IT in our small cap fund. Yeah, but we don't think Indian IT is going to disappear or the sector is going to die. It will reinvent itself. Of course, in that reinvention, there will be winners and losers, and we need to look out for that. If all prices cross $100 a barrel, is that a problem? 100%. As you know, there is a big risk that Indian economy, Indian markets, which has always been crude oil price. India imports almost 80% of its energy. It is the largest import item. Last 2 years have been good because crude oil prices have come down to $60-65 a barrel. Now, if crude oil prices go to $90 briefly and come back, it is okay. But if crude oil prices are going to go to 90 or $100 a barrel and stay there for a prolonged period of time, will that cause problems for Indian fiscal, Indian inflation, Indian current account? Yes. So what we are saying is, at this point of time, we do not see a situation where crude oil price goes to 100 or 90 and stays there. Yes, if tomorrow there is a Iran conflict, if there is a war in Middle East, can crude for the short term go up to 70, 80, $90 a barrel? It can. And but we believe that, looking at the supply demand scenario, it should not really stay there for a very long period. Would you recommend investing in multi-asset funds holdings? I think multi-asset is definitely, at Mirae Asset we do have multi-asset funds also. This have their own utility, and those investors who are interested in that can reach out to our sales team, which will help you kind of figure out what is the best fund for you. As per the US trade deal, India is going to stop buying Russian oil. Okay, so this is something, I think there are differing versions from the US government and from the Indian government. From what we have seen so far in the media, is that Indian government has already reduced oil purchases from Russia. Will it become zero? I don't know. I think India is always looking for good pricing on oil. If you see, Indian companies are also supposed to start buying discounted oil from Venezuela. And I think it's a good thing that the Venezuelan market has also opened up in terms of another country which is now going to slowly get back into the international market. So as of now, even if Iran supplies were to go away from the market in the short term, we do not see as a big disruption. Aren't small cap companies unreliable? Okay, so I think that's a question that I tried to address. As I said, the small cap universe has seen a meaningful change in definition in the last, I think, 5 6 years. I know today, let's say, small cap universe roughly between 10,000 and 30,000 crores, as per the 251st to 500 company by market cap. Let's say average is around 20,000 crores. This a 20,000 crore market cap company is not a small company by any stretch of imagination. Typically, it would have 500 crores, 700 crores, 1,000 crores of profits. That's a very, very large number. It has to do something right to be able to deliver those kind of profits. A lot of these companies are leaders in their own respective categories. So for instance, India's largest diagnostic company is a leader in its own space, but because the market cap is what it is classified as a small cap company. India's largest plywood company, India's largest sanitary ware company, these are all leaders, been around for 50 years, 70 years, 100 years. But by virtue of the niche that they're present in, they are classified as small caps. And similarly, there are a lot of other such companies who I can tell you who are leaders in their own respective categories, in their own respective niches, which have worked very hard, deliver good return on equity, good return on capital employed, who have good clean balance sheets, who are growing at 10, 15, 20, 25% on a CAGR basis. And so there is a lot to pick and choose. And I think our understanding of small cap has to change and evolve as the Indian economy and the small cap space has evolved over the last 5 to 10 years. Uh, Small cap and value funds, so I think we are confusing two things. So value is a style, small cap is a category. So as far as we are concerned, and Mirae said, we try and buy those companies in the portfolio which have consistent or which have visibility of earnings growth, which have good return on equity, good return on capital employed, have moderate or decent valuation, and have a sustainability, or in our view at least, they will be around for a long time. What are the main features we need to check before investing? Of course, that's a very good question. I think one should always look at what is the credentials of the fund house, of whose fund you are going to buy. As you know, this is a business of trust, and how the fund house and the fund manager has conducted themselves in the past. What is the track record of the fund that you want to invest in? And if you are an active investor, you can look at what the fund is owning, what are the portfolio psychographics. I think all of these are a quick comparison with some of the competitors. These are some of the things that we can do. Why such a long list? I think we are building a fund for scale. When we did our NFO, we raised around 1,000 crores. Today, I think we are around 3,000 odd crores in size, and we hope that the fund can scale up as more and more investors continue to trust us. And what we believe is, while there is no science to it, whether 30 stocks is perfect, 50 is perfect, 100 is perfect, at this point of time, we believe the portfolio is fairly well diversified, and it is built for scale. and that is why we have the 80 stocks. There is some allocation to large cap, of course. Why is that? As you know, SEBI allows mid cap and small cap categories to have up to 35% in other categories. So, for instance, in small cap funds, you can have up to 35% in large and mid. In mid cap funds, you can have up to 35% in large and small. That's a leeway available for all funds in these categories, and different fund houses use it in their own ways in which they feel suitable. Of course, as you know, last year was very, very difficult from both a market volatility and earnings growth perspective. So what we have done is, in a very volatile time, we have invested in some large and mid cap names which we believe have good earnings potential and which are delivering consistently good earnings, and they have definitely helped the portfolio. And as and when we believe there's what you call companies which kind of have the potential to compound at a fast pace in the next 2, 3, 5 years, even if they are large or mid, we would like to invest in them within the leeway which is available. So as of now, portfolio is around 70% small cap, and the remaining is in large and mid cap space. In future, this allocation can of course change. If we find more ideas in the small cap space, this allocation to small cap may increase in future. Yeah. What type of volatility in comparison to other small cap funds should we expect? So, I mean, very difficult to answer about the future. As you know, this was a very, very difficult year. While the benchmark returns were zero, or you can say almost negligible, the fund has delivered double-digit absolute returns in the last 1 year. And despite a very difficult environment in the economy, a difficult environment from earnings perspective, and our hope is, as the small cap earnings turn from negative to positive, the growth prospects should get better. And if we get our stock selection and risk management right, hopefully we can continue to build on this performance in the next year. Okay. Now, what is the difference between active and passive fund? Of course, passive funds copy or replicate a benchmark, while active funds are managed on an active or a active stock picking perspective. What returns can I expect? Very, very, very difficult to answer, but I can tell you what has happened in the past. If you look at the Nifty Small Cap 250 index, that, as I said, is in existence since 2004. The 21-22 year IRR is around 16%, and that's just the benchmark. And of course, one would hope and one would try and endeavor to beat the benchmark, right? So that's a hope. Of course, no guarantee that we will be able to do that or not, but of course, that is what we would want to do. In the last 1 year, of course, like I said, benchmark was almost negligible, and still the portfolio managed to deliver double-digit returns. And hopefully, we can build up on that performance going forward. So the definition of small cap assets invest in below 500 stocks. Yes, as per the SEBI definition, small cap funds the small cap definition is below 250. Right, so 251 onwards, there is no lower limit. So what we have done is, the universe what we look at for investing is 251st stock, which is around 31,000 crore in market cap, and let's say 1,000 stock, which is around, I think, 2,300 crore market cap. So there are 750 odd names in that space. While a large part of the portfolio comes from that 251 to 500, but there are also, yes, stocks below that also, and whatever stocks which we believe are of good quality and which have good earnings visibility. And so, for instance, last year, some of those names, despite they being below 500, delivered consistent earnings growth, and that is why they were able to perform quite well. And some of those selected names will continue to be part of the portfolio. What is the risk to earnings growth happening in small cap space? Of course, I know there are always risks. I think the biggest risks are coming from outside India. Indian cyclical economic recovery, I think, continues to be pretty robust. If you see, the biggest risk for the market and the economy was coming from outside India. I think the biggest overhang was the US-India trade deal, which is also kind of happening now. We had a good budget. Interest rates are low. Economic growth is bouncing back. As RBI said today, they expect this year economic growth should be between 7.2 7.3%. Even next year, the first half, as per RBI's projections, should be closer to, I think, 6.8 6.9%, which is a very, very good real GDP growth. You add 3 4% inflation to it, you're looking at nominal GDP growth around 10 11%. If 10 11% is the normal GDP growth, typically we have seen, if you look at the last 30 years, large cap companies or nifty companies have delivered a 11 12% kind of earnings CAGR, which has been in line with that number. And we believe that the small cap companies, because of the size, can actually grow faster, and therefore small cap companies should be able to deliver faster earnings growth. As we put in this slide, we expect the 2-year earnings CAGR for small cap companies to be around 17%, and that we believe is a good 5 6 7% higher than what the large cap universe can deliver from a profit growth perspective. Cash, we don't keep much cash as a house. We do not take cash calls. I think 2 3% or thereabout should be the cash, but we do not take any big cash call. The portfolio normally remains almost fully invested. Is it okay to put lump sum? I think we already spoke about 50% now and 50% over the next 6 9 months. 7 year is a very good time period, to invest in the small cap space. A quick word on small cap valuations. I think last 16 months, we have seen significant cool off in the valuations. As I said, the benchmark has corrected almost 25% from the peak, and several stocks have corrected 20 30 50 70%, and some even more. So there has been a cool off. Are there still pockets of froth in the market? Yes, there are. Right. So for instance, if you look at the portfolio, we have stayed away from companies in the EMS space. Right. So those some of those names were trading at 50p 100p, and we have seen of late the valuations have come off. So we have stayed away from some sectors or niche or theme which are very, very expensive. And I think there's still, you can say, some defense names, some railway names, some EMS names, which we believe are very, very expensive, and therefore we have stayed away from them. But by and large, the sectors that we spoke about, there are enough to pick at a moderate or a reasonable valuation, especially after a 1.5 years of time correction, 25% of price correction, and the earnings rebound that we believe should happen going forward. Okay, I think we have largely covered the questions. Do we have any further questions? Let me see if we have something new. Will we have some allocation to gold? No, the portfolio will not have any allocation to gold. It is an equity fund and will remain equity focused. So no gold and silver allocation in this fund. Yes. Can I invest for 2 years in small cap fund? 2 years is not the right time horizon, and we expect anybody coming to the small cap space should have a 5-year view. What kind of investing? So we believe in growth at a reasonable price. So good earnings growth, sustainable earnings growth, good quality of management, good quality of business, low leverage on balance sheet, good ROEs, and available at a reasonable valuation. Do you think of any constraints in managing Mirae Asset Small Cap Fund owing to its OEM? We are lucky that the AUM is pretty small, so size is not a constraint for us. In fact, that is actually helps us to do more bottom-up ideation. So if you see, our AUM today is around 3,000 crores, which means that if we have a 2% allocation in any single stock, we need only 60 crores of liquidity. And therefore, we can really go down the curve in terms of identifying ideas. If there is a change in view, we can also exit the position much faster as compared to, let's say, if our AUM was 30,000 crores, 40,000 crores, or 50,000 crores. Having said that, does size decide how good or bad a fund will be? I don't think so. But yes, having a smaller size does give some advantages, especially in terms of stock picking and also in terms of liquidity. Now, as compared to other fund houses, how good we are investing. So I think I let the numbers speak for themselves. As we speak today, of course, they are very early days. Mirae Asset Small Cap Fund ranks 1 in the last 1 year. based on its performance as compared to around 30 small cap funds which are available in the market. As I said, this is only the first year. Hopefully, we can build up on this performance going forward. How you decide when to exit the stock? That's a very good question. I think if you see the portfolio turnover ratio in the last 1 year has been very low. I think less than 10%. So typically, you would like to invest in stocks which we can hold for next 2, 3, 4, 5 years, and we want the stocks to compound. However, there are times when the stock runs up way ahead of expectations, and the value. There is a big gap which emerges in terms of what we believe is the right value and what is the stock price. At those points of time, we may trim the stock, we may exit the stock fully. And of course, there are times when we go wrong. So we expected a certain earnings trajectory from a company. However, the operating environment can change. The government can come up with new regulations. Sometimes the company is unable to deliver on what it's promised on, and therefore our outlook on the company could go wrong. At those points of time, we would like to exit the company. At some points of time, companies acquire companies, right? So sometimes there is a small company, it could acquire a company larger than its own size, for which it could be taking a lot of debt, and that and let's say in those circumstances we would evaluate whether the company will be able to service the debt. Is it taking too much risk? Will it make sense for the minority shareholders to be invested in the company? And therefore that becomes another example of a situation when we would kind of reconsider our view on that company. From a valuation perspective, again, I think there's a lot of questions on valuation. Like I said, we have seen 1.5 years of time correction and a 25% price correction. So we believe valuations have cooled off. Yes, there are still some pockets of froth, but at the index level, we believe things have become much more saner now. And if you look at our portfolio, despite the valuations being very high, when we launched the fund in January last year, as you see, the fund has been able to deliver double-digit return even this year, when the benchmark has delivered almost negligible returns. And so what we are trying to say is it is possible to do bottom up stock picking. I think small cap space is one big example where bottom up stock picking can make a big difference. And therefore, if you get your stocks right, if you get your sectors right, there is scope to have compounding in the portfolio. So some numbers, if you do SIP of certain amount, when you will have a corpus of 1 crore, I think there's a lot of simple tools available. Even if you go to Mere Asset Mutual Fund website, several third-party websites, you will see a lot of these tools which will help you figure out what is the SIP amounts you need to arrive at a certain financial goal in the future. Please use some of these. Your portfolio seems to be tilted towards BFSI services. So I think the portfolio has a fairly good balance of banking and financial services, auto. In fact, we are very good exposure to capex, engineering, capital goods, defense, and therefore I think we have capturing both the consumption and the investment, because we believe Indian economy will have both engines. We will have the consumption, and as we've seen, government has a clear focus on investments, and that's again a space that will continue to do well. Are the pockets of fraud in capital markets? Yes, they are. There are some stocks which are overvalued. I think we should be cautious on those, but largely I think there is enough to pick from or choose from in that space. Yeah. Okay, I think we've largely covered some of the questions from back. IT sector view, I have already shared. Portfolio psychographics are available on various websites. In fact, if you pick up the fact sheet, you'll find a lot of data on our fund. Lump sum amount, as I already said, you can put 50% now, and 50% you can spread over the next few years. Do we have some micro cap stocks also in the portfolio? Yes, we do have that. In fact, some of these micro cap stocks, if they are good in quality, if they're good balance sheets, good earnings growth, we have some of those even in our flexi cap fund, which is also the fund that I manage. Returns, what is the difference in terms of returns compared to other small cap funds? As I said, we rank 1 out of 30 small cap funds which are available in the market, of course, in the last 1 year. And this is only the first year, and we hope we can build up on this performance going forward. Yeah, I think we are largely done for today. I think that's all the time that we had. Thank you so much for joining this session, and I know we hope that this session was useful for you. And we'll come back soon with another engaging session, which where we will try and address some of your concerns and queries.